Hello and welcome to Flagstaff TV. Today we are joined by Paul Griffiths, who is the Executive Chairman of Predator Oil and Gas. Paul, thank you very much for joining us today.
Good afternoon. It's a pleasure, Catherine. Always good to join these calls.
Thank you. Paul, following on from your successful webinar last week, can you tell us how would you describe the MOU2 drilling results so far?
Work in progress, I think, would sum it up initially. I think I'd like to put it in context, though, and it's a bit of a digression, but I think it's important to understand, the background to where we're at. This area's Griffiths hasn't been explored for 50 years. So when we came along in 2021 and drilled our first well, and now we've drilled MOU2, we've actually changed the goalposts significantly for this part of Morocco. Imagine an area that was so desolate, nothing ever happening there for 50 years. And then along we came us and we started the drilling program and we've started the ball rolling. So that's one thing. Second thing, a couple of years ago, before I drilled the first well, I was told that this area was nothing like the Rab Basin geology. Yeah, well, surprise, surprise, it's quite a lot like the Rab Basin geology, but you have to drill wells to prove that. Then I was told I'd never find any thick sands. Well, wrong again. We found a lot of sand in MOU2, and there'll be a lot of sand we anticipate below the current TD of the well, or the current suspended TD of the well. Then I was told it was all volcanics. Well, surprise, surprise, no volcanics, just sand, potential reservoir. So you have to put this in context that a lot of people like to see the glass half empty. I like to see it half full. A lot of people don't necessarily want to describe this as being successful because it's been sitting on their doorstep for 50 years and they've done nothing for 50 years. So I think we've broken new ground here, and I'm very, very pleased with what we achieved today. It's not perfect, no doubt about it. It's not perfect, but that's the challenge. We move on and we carry on and we get to perfection. And then another thing I would sort of point out is that, we have just proven a reservoir sequence 8 kilometers away from MOU1 with lots of similarities. 8 kilometers. Like the structures that we see in the Rab Basin, for example, maybe half a square kilometer, maybe up to 2 or 3 square kilometers. And no doubt you need 3D to find them. You wouldn't find them without 3D seismic. We wouldn't find them in our license without 3D seismic. However, the emphasis on 3D has probably stopped the Rab Basin developing further potential for deeper, bigger gas plays because everybody went for the easy, tiny 3D target. Well, that's not us. We're going for the big one based on 2D data, and we're going for drilling. And we're being successful to date, believe it or not, and we're going to continue to be successful over the next year or two.
Paul, what's the next step?
Next step is very clearly testing MOU1. It wouldn't have been my preferred step, a month ago. I wanted to test all the wells together to save money, and I wanted to delay the MOU1 testing until we got additional wells to test. But that hasn't worked out quite in the time frame I would have hoped for. So we're going to move ahead and test MOU1 and gather the data on that. So since last week, a few days is a long time in our business, particularly for a company like us. We've moved to find an offset well very similar to MOU1 that flowed gas from a reservoir very similar again to MOU1, and we'll use that well as our analog for testing the testing procedures on MOU1. What we want to achieve is 1, a minimum flow rate, 2, calculate an absolute flow rate, and 3, test the potential for communicating with a minimum 3 square kilometers around the MOU1 well, and obviously looking beyond, hopefully to see something beyond to reflect the 30 or 40 square kilometer amplitude anomaly that extends 8 kilometers to the east and beneath MOU2.
And what is the significance of MOU1 testing?
Well, the significance is testing the well offers us different forms of financial financing, basically, because ideally, you have then more optionality to forward sell gas and even potentially to offer a slice of the project through a shareholding in our subsidiary company, Predator Gas Ventures Limited, a small shareholding, I would add. So that would address government consents, because a small shareholding would not require government consent. And secondly, it would address any materiality issue. We would not be divesting of a significant amount of equity in the license at this stage. And, you know, people may question, well, why would you do this? You know, the alternative is ultimately you could raise money later in the year, etc. But it's all about getting value for that money that you raise, and you have different ways of raising it. You can raise it in the market, you can raise it through project finance, you can raise it through the methods I've just described. So I don't think people should get hung up on funding just yet. It's a little bit early to get hung up on that. We have managed our cash position to allow us to test MOU1 very effectively. And I'm anticipating that we'll complete that testing no later than March of this year. I should hasten to add, not next year, this year. And we've started to source the equipment and put together the program and the costs for doing this. So the significance is it's something we would have done anyway, but we would have preferred to have done it after the current well had reached TD. But now we need to fast track it to get it done, to demonstrate, you know, why our thinking on gas in Griffiths has been substantiated by the drilling results to date.
Well, please, can you tell us about the re-entry and deepening of MOU2?
Okay, so naturally, it's disappointing not to get to the objective in the first go, because obviously we had problems with the drilling mud through that particular zone that we encountered in this well. However, we've already taken steps to rectify that situation and start the process of finding the right mud for the section that we want to drill. We've also revisited the geology and the seismic where we are at in the well, and believe that we're literally sitting maybe anywhere between 20 or 50 meters off the target. The target is still there, sharp as ever, below the current TD of the well, currently suspended part of the well, and therefore nothing has changed in terms of our desire and our excitement to get to that target. And that's the next step after MOU1 testing has been completed. So we will get there. We just have to be patient, unfortunately.
And what's your take on the current energy market in terms of the cost of living crisis?
Well, it's my pet hate, frankly, because being in our industry is not, you know, a great time to be in this industry, given, you know, the global representation of the industry. But we have to face reality, and it's all about reality, science and reality, not what may happen in 2050. It's what's happening now. And energy prices will come down, but they will not come down to the levels that we saw previously, you know, before COVID and before the current hike in gas prices. And in particular, seasonal pricing will change and will be significantly increased relative to, say, summer prices versus winter prices. That's always been the tradition. Unfortunately, green energy is not yet in a position to deal with supply and demand of energy at those times when energy comes from, effectively, most energy would then come from natural gas, because renewable energy can't meet the seasonal fluctuations. That's a factor, reality of life for the next 10 or 15 years. And no matter what anybody says, no matter what science is put forward, there is no commercial model today that allows us to move away from gas without pain being inflicted on large proportions of the population. So we've seen inflation increase because of increase in energy prices. When inflation comes down, which it very much will during the year, we don't get into a deflationary spiral. So costs and the cost base are going to be higher. Services are going to be higher than they were before inflation. That's the way inflation works. You don't suddenly get a reversal of 10, 20% in inflation to drag you back down to the levels you were a year ago. And the other thing is that that's here to stay. So, you know, in many respects, the windfall taxes that have been introduced are in response to public opinion, but they will deter investment in some fossil fuel projects, and some may say rightly so. Well, the problem is that then hits again the cost of energy, because without investment in gas, as we've seen in Europe investing vast sums of money in LNG, then we're not going to start to try and stabilize energy prices during the energy transition to a greener energy economy. And the other thing you'll see, which I think is a bit hypocritical, is the governments love to introduce the windfall tax. After denigrating the fossil industry for the last 2 years, they now go cap in hand to squeeze as much money out as they can out of a situation that governments have created. They created the energy crisis. The fossil fuel industry didn't create the energy crisis, governments did. And now it's a bit hypocritical to then turn around cap in hand, take the money off them, and then say, well, I'm going to spend it on this. Well, I know one thing they're not spending it on, and that's public services pay. I bet you they won't get any money out of the windfall tax. So I think it's a little bit, hypocritical of some people who pathologically started this war on fossil fuel industry as a sole contributor to climate change. And that some of these people actually still go to Michelin restaurants, and a few of them are obsessed with high performance cars. Well, let me tell you one thing. If you're in a food bank, the best you can do is some crumbs off the shelf, not a Michelin restaurant. And there's no reserved parking for performance cars in food banks. So my message to them is get real, connect better with real people and real issues, and stop showboating.
Thank you for that, Paul. Can you tell us finally what's next for management?
Well, management main objective has been for the last 3 years to develop the gas potential of Griffiths and contribute to Morocco's reduction of dependence on fuel oil for industry and coal, which are very carbon intensive fuels. And that's a noble aspiration to have. And of course, all noble aspirations sometimes come with a price tag. And we pay a price tag, as a small company, we're paying 100% of the costs to try and develop this situation, which we 100% or 110% believe in. And that's what motivates us. It's a challenge against nature. It's a challenge against conventional opinion on the prospectivity of an area that people have written off for 50 years. So that's the challenge for us. But we believe that during the year, we will complete that initial process, that we will get Griffiths into a gas generating, gas producing window by the end of the year. And then we'll move on to our next project, which will probably make a lot of people sick, is green energy, green hydrogen. We have developing a green hydrogen project, which is kind of unique for what we see as currently being rolled out, because it could be commercially attractive. And secondly, the values that we have created in trying to build projects in areas that were unloved are basically very attributable to green hydrogen, because nobody yet has a commercial model for green hydrogen. Nobody has the experience of developing gas in the industry in the countries that we're trying to develop it in. And we think that we can create something quite visionary, quite different in the green hydrogen sphere. So that's, ultimately where we would like to be moving towards by the end of this year and early next year, after delivering success at Griffiths.
Paul, we look forward to hearing more about it. Thank you very much for your time today.
Okay, thank you.
And thank you for watching Flagstaff TV.